Welcome everyone to the first installment of EETV, and I'm Daniel Smith. I'm a random punter who's here to have a chat with Brad, the regional head of EasyEquities in Australia. How's it going, Brad?
Yeah, all good. Good to have you on.
Yeah, well, I'm excited about the first installment. Excited to chat to the users of EasyEquities and also hopefully help some people out with some not advice, because we can't give financial advice, but hopefully educate the market a bit on what they can do in the space.
Definitely.
So there's been a lot of news lately around some various US stocks, particularly Coinbase as being one that's a real hot topic lately. I know for a lot of people, they get a bit confused about how they can get involved with the US market. And I thought that could be a good topic for us to chat through today, Brad. And a good starting point, I guess, is if you're not interested already in the US market, why should you be interested in the US market?
Well, everyone should be excited and interested in the US market. These are the brands that you interact with on a daily basis. Whether it's Disney, Apple, Amazon, Netflix, all the companies that you interact with on a daily basis, you're now able to buy shares in those companies.
Gotcha. Makes a lot of sense. And I guess when you talk about buying shares in the companies you deal with on a day-to-day basis, I guess you could tie that back to the conversation around how money doesn't really have the value that it had by sitting in the bank anymore. Like, you're not going to make any money off that, are you?
Yeah, well, with the low interest rates in the banks at the moment, it's quite tough to earn any interest in the bank. So where you're going to earn your money is by investing in companies on the stock market, companies that companies that are good, and you will earn when they grow, you'll grow with them.
Yeah. And I know a lot of people look for quick wins in terms of, what's going to skyrocket tomorrow. And particularly with the guys who like to have a bit of a bet and a play around, they're always looking for those, prospecting mind shares and all that sort of thing. But it probably makes more sense to look for those companies, particularly if you're starting out, that you know of and trust and use yourself, because they're the ones that are probably doing well and are going to continue to grow and have a track record. Is that fair to say?
Yeah, one of our investment philosophies is to invest in the shares you love. If you're using those shares and all your friends are using those companies, and all your friends are using those companies, then it must be a good company. And that's a great place to start, somewhere familiar.
Yeah, absolutely. And while there's plenty of good Australian shares, obviously, and great companies in Australia, a lot of the companies that we use day to day are from the US, right? Like, you've got Apple, you've got Uber, Tesla, all these kind of shares. So it is probably easier to find those recognizable shares that you use every day on the US market. So we've covered off a few ways or reasons why you'd want to invest in the US market. Can you talk us through some of the options for actually getting involved with the US market?
Yeah, so traditionally you would go to your bank, and this would be limited to high net worth individuals. The two main reasons is that the costs were just too high. And second of all, the share prices were just too high. So say you wanted to buy Amazon shares. They're trading at $3,000 a share. And in order to buy one share, you needed to save up to $3,000. And then you could only buy one share. You wouldn't be able to buy any other shares and diversify your portfolio. So technology has enabled us to offer a product to retail clients, which enables anyone, regardless of your net worth, to buy US shares. And second of all, we fractionalize shares. So instead of having to wait till you have $3,000 to buy an Amazon share, now we enable you to buy any share in the US, regardless of how much money you have. You can take your $1,000 and buy 10 shares worth $100 each.
Gotcha. So just to make sure I'm clear, say I want to buy a share that's worth $3,000, but I've only got a few $100 to spend, or maybe I've even got a few bucks to spend. I can get access to those shares through these platforms that you're talking about by buying fractional amounts. So essentially that platform buys the share and then I'm buying it from the platform. Is that how it works?
Yeah, that's correct. So if you only have $50, you can go and buy $50 worth of Amazon shares. You can keep on buying those fractions of Amazon shares until you have a full Amazon share.
Yeah, gotcha. And some people might think, oh, wouldn't I be better off buying full shares? But that's not necessarily the case, right? Like owning a fraction of an Amazon share can be just as valuable as owning 10 shares of a much lower valued share.
Yeah, to the investor, it makes no difference. It's the exact same process and the same return. If the share goes up 10%, your share goes up 10%, regardless of how much you own of the company. And it's much better to get a diversified portfolio and buy more shares and invest in more shares that you like, instead of putting all your eggs in one basket.
Got it. Makes total sense. Now, one of those platforms that you're talking about is obviously EasyEquities. You guys have been around since 2012, right?
Yeah, officially launched in 2014.
2014, yep. But things got started in 2012, so it's a pretty robust platform you've built, and your mission is obviously to make it easier for people to access investments. And for Australians who want to get it into the US market, it's a great option. Can you talk us through, for someone who's keen to jump onto some of these US shares and start investing, what the process looks like if they want to use the EasyEquities platform, how long it takes, what steps they need to take, anything else you think is relevant?
Yeah, definitely. So we've made the process really easy. So you just have to go onto our website. It's www.easyequities.com.au, or download the app. And from there, you register for an account. Within 10 minutes, you've registered for an account and verified yourself, and now you're ready to deposit. So this is normally where it gets tricky for US shares, because in order to buy US shares, you need US dollars. So that's been a barrier to entry as well in the past. So with EasyEquities, you can deposit your Aussie dollars onto the platform and use our EasyFX functionality on the platform, which transfers your Aussie dollars into US dollars. Now, within 24 hours, those US dollars come into your account, and now you're ready to buy US shares. So you wait till the US market opens, you take your US dollars that have now landed in your account, and you go and choose any share that you want to buy, and you place the market order, you buy the shares, and they get delivered into your account.
Gotcha. So it sounds pretty simple. So you can have an account within 10 minutes, and then you can handle the whole transfer process from AUD to USD on the platform. That's done within 24 hours, and then you can start investing in US shares.
That's correct.
So, Brad, a lot of people who say they've gone through the process, set up an account, all of that, they might be a bit worried about the fact that they're going to be sleeping while most of the market action's happening. What would you say to that?
Yeah, that's a great question, Dan. So we have a piece of functionality called the buy instruction, which allows clients to place orders outside of market hours. And what that means is, during the Australian day, you can place an order to say you want to buy $100 worth of Netflix, and then you can close your app, go to sleep. As soon as the US market opens, we place that order on the market for you. We deliver those $100 worth of Netflix shares into your account. You wake up in the morning and you got the Netflix shares in your account.
Gotcha. So that concern around being asleep while the market's operating kind of gets cancelled out by that.
Yeah, that's correct.
And in the meantime, you can also play with a demo account, right? So if you want to start getting involved straight away and practicing, you guys have a demo account, is that right?
Yeah, so we have a demo account with US shares. We give you $10,000 of monopoly money, where you can go onto the platform, use that $10,000, try it out, buy some shares, see how you do, which is normally the first daunting step in investing, is actually getting started. So by using the monopoly money and getting started gives you some confidence to start your investment journey.
Yeah, cool. That makes sense. And how much do you need to get started, Brad? Like, if I want to jump on and start investing in, say, Amazon or Tesla or whatever, what do I need, like $1,000 or?
Yeah, so that's also been a barrier to entry for retail clients, is you had to come with a minimum amount of money to get started. So we've taken away those barriers to entry. And so the short answer is 0. You don't need any minimum to get started. And we also give you $10 into your EasyEquities account when you sign up to start your investment journey on us. So use the $10 to see if you enjoy it, how easy it is. And if you like it, then you can deposit your own money and start from there.
Yeah, nice one. So 0 money down, I can own a fraction of Amazon or Apple or Disney. I can own $10 worth essentially, and yeah, nothing. So there's no risk for me. If I hate the platform, I can drop out, but I'll still have $10 worth of shares sitting there.
100%.
Okay, well, that's pretty cool. Very easy. Well, thanks a lot for that rundown, Brad. I think this has been a good first installment for EETV. For anyone who's watching, whether you're watching on YouTube, Facebook, feel free to comment, ask any questions. Brad, you'll be checking out the video to hit up and answer those questions, right?
Yeah, definitely. Ask me any questions. We'll answer them in episode 2.
Awesome. All right. Cheers, Brad. We'll catch you in the next installment, mate.
Cool. Cheers, Dan.